So guys, I did a thing today. I sold my first stock. Yay! So, welcome to my channel. Welcome. I'm Mrs Vee, and I am on a journey to financial freedom. And in today's video, we're gonna be talking about investing in my overall goal to financial freedom. So yeah, I decided to sell some stocks that I was no longer interested in. And let me just preface this by saying I'm not a financial advisor. I am just sharing my journey and just sharing the things that I do know. So, of course, do your own research. So about 2 years ago, one of my coworkers gave me and my other coworker a little crash course, in the stock market. And so after he gave us the crash course, because he's been doing it since he was like 19 or 20 years old. So anyway, he just gave us the basics, like what the Dow Jones is, the NASDAQ, and all that, the ticker symbols, stuff like that. And he didn't give us a lot of advice on how to research companies. That's where Mommy Trader and Wall Street Trapper came in for me. So I did a little research. So I'll be honest, when I invested in these, I went ahead and invested in 3 companies after he gave us that little crash course. Pretty much just out of excitement. I didn't really do a lot of research. And so that was one of the companies I just sold. I only had 3 shares. I just wanted to get a feel of it. And so I bought the 3 shares back in 2020 for like $15.97. And I sold them the other day, and they were up to like $24.19. So what, I gained like $10 in a couple of years just doing nothing. They say investing is like the lazy way of getting wealthy. So now I understand what they're saying. So I was intrigued. So I knew enough to sell the stock when it was in the green. I knew that, and I knew that I have to have the stock at least 1 year to keep me from having to pay what's called capital gains, some additional taxes you have to pay on your stocks. So that money that I profited off of that stock, I'll just leave it in my brokerage account and put it towards some more stocks that I already have, just to build those up. So I was just excited just to gain a profit and understand a little bit enough to know when to sell and when to buy. So I know to buy when it's red, when the market is red, and I know to sell when it's green, just the basics. But I'm still doing research. So yeah, I just wanted to stop by and share that with you guys. So this book is my investing workbook that I picked up from Mommy Trader last year, 2022. And if you know Miss Vee is always going to try to save money. So even though it's 2023, these principles still apply. So I'm going to go over some of the things in here and share with you some of the financial mistakes I made. And so I'm thinking about the financial mistakes I made. Had I not made those mistakes, would I be here today? Ask yourself that. If you hadn't made the financial mistakes in your past, would you be here today where you are now as far as the mindset change? I don't think I would. I think I still probably would have been spiraling out of control spending. So I'm actually appreciating some of my mistakes. 2 mistakes I made. I cashed out. Well, let me go back. I've been working since I was 18 years old. Of course, when I was 18, I was not investing in the stock market or anything like that. But I was learning, to earn money and what was important. But of course, at 18, what do you expect? So I am 51 years old. So what? I've been working. Let's do the numbers. Hold on. $51 minus 18. Oh, wait a minute. Is my calculator working? 51 minus 18. So I've been working 33 years. Most people can retire in 33 years. Excuse me, or less. So I am sharing my journey because I got to play catch up, because I need to make up for some of the mistakes I made. One mistake I made is I cashed out my I don't know what it was called. It wasn't 401k. Anyway, I cashed out my retirement accounts twice. Yeah, I depleted them. That's one mistake I made. The next mistake I made is I accumulated a lot of credit card debt when I graduated from college as a respiratory therapist. So I did that twice. I paid the $15,000 worth of debt off and went right back because I did not have any discipline. I did not have a mindset change. I went back and charged up those same credit cards again. So you can say I paid off $30,000 worth of credit card debt. So those are the two mistakes I made. Cashing out my investments accounts. That money could have been still working for me now, and I'll be that much closer to my goal. And accumulating the $30,000 worth of debt, that would have helped me be more closer to my goal, because that $30,000 I paid paying those cards back, that money could be in the bank or in an investment account working for me. So those are the mistakes I made. So that's why you'll see on my channel, I'm a little bit more serious about financial freedom. Of course, I do all these saving challenges, but yeah, Miss V really sets a goal and reaches them. So yeah, so we're going to go ahead and get off into this book. I'm going to go over a few things. I'm not going to share everything in here because some of the stuff I'm just going to keep private, like my net worth and things like that. But yeah, so this is the book from Mommy Trader, 2020 Year at a Glance. So she gives you a little note here thanking you for supporting her business. Thank you, Mommy Trader. Thank you, thank you, thank you. We don't tell you enough. Thank you. So she said, before you invest, your senior years are covered. I guess by that, I'm not sure what that means. I guess that means like your senior years are covered. Like, I don't know exactly what that means. We're going to keep going. You have funds. It said reasons you should invest in your money. Your senior years are covered. You have funds when life happens. Oh, okay. I understand now what she's saying. I got it. Sorry. This real life over here. Okay. You lower these are the benefits of investing. Your senior years are covered. So if you invest in if I'm not mistaken, she's saying the earlier you invest, your senior years will be covered because you'll be making money on the back end, later on in life. I got you. I got you, Mama Trader. You have funds when life happens, right? You'll be able to go get your money out if, you have an emergency. You lower your taxes. You get all kind of tax breaks. You're creating generational wealth. Yes, that's what I'm trying to do over here. You've got time, so start today, right? You're protected from inflation. Yeah. You become wealthier due to compound interest. Yes, I love some compound interest. You can afford debt when an emergency happens. You're inspiring your children to become better with their money, and you'll be financially independent. Thank you. So these beginner investing tip, buy and hold good companies that are long-term. Be consistent with your investing. Start small with one stock or fund and slowly build from there. Small amounts do add up. Thank you, thank you, thank you. Small amounts do add up. Yes, they do. Kathy's Cash and Coin and SD and Raised Budget, all of those ladies are doing well with small amounts. I'm so proud of them. Oh my, they doing wonderful. Your money makes more when invested in the stock market. Actually, it does. Do not invest your emergency fund. Okay. Educate yourself to help control your emotions. Yes, I'm glad I got educated because, baby, when that market was red and I lost like $700 or $800 in my Roth IRA, baby, I would have panicked. But thank God I educated myself before I started investing in my Roth IRA. Be an owner and a consumer. Beginners should avoid day trading, swing trading, option trading. Yeah, I'm not interested in it. It's too fast paced, and I don't want to sit in front of a computer all day. I don't want to do that with a job. So I know I won't do that with making money. Okay, if you're low on funds, this for all our people that are coming up with 1,000 excuses not to do it. So your why has to be stronger than your excuses. That's what I figured out. Because we make excuses not to do certain things, but we will do what we want. So make this something that you want to do. Start a savings challenge, yes. Cancel some subscriptions, yes. Lower dining out costs. Invest $1 for each day of the month. That's a saving challenge Mommy Trader have. Save your coins and invest. You know Mrs Vee all about that. Invest some of your side income. Reduce some of your monthly expenses. Yeah, baby, you ain't got to have that iPhone 14 right now. You can get it later. Complete a no-spend month. Use extra money like refunds and bonuses and raises. Pay off high interest debt. Then use that money to invest. Yes. Thank you, Mommy Trader. That's some wonderful advice. Yeah, so this is what I'm going to go over today. I don't mind sharing my wall of accomplishments. So she says, in the past 3 years, what did you achieve financially? Financially, I paid off that $15,000 worth of credit card debt. That was back in 2020. I had paid it off before then when I was talking about the $30,000. That was like in 2015, 16 when I paid it off. But remember, I said I charged those same cards right back up. And the second thing I did was started the cash envelope system. Yay! I started that in April of 2021. Yeah. And then the other thing I did that I am proud of financially is I stopped using credit cards and I started building up my personal and my husband and I joint savings account. Yes. So write down some of the hurdles you had to overcome in life. I had to stop using the credit card. I just had to stop using it. So that's why I was able to pay off this $15,000. I had disciplined myself. I said, wait. Now, the last time I charged up all these cards, I had got in a debt consolidation program, and they paid it off. Well, I paid it off through them. It took me 4 years. They knocked down the interest, and I paid it off that way. And the second time, when I went back and charged up those same credit cards, because I did not have a mindset change, I did not have discipline, I said this time I am going to have some discipline and a mindset change. So what I did was, before I attempted to pay that $15,000 worth of credit cards off this time, I changed my mindset. And I said, I'm going to give myself 6 months of not using a credit card before I attempt paying these off. So meanwhile, I was still just paying the minimum payments on all these cards. It was like 9 credit cards, guys. And so I did that. It was hard at first, but because I was in the habit of just pulling out that credit card. Even if I had the money, that was so sad about it. Even if I had the money, I just pulled the card out. And I said, no, I got to stop doing that. So I hid the card from myself. I'm talking about I hid it for real. I couldn't find it. I had forgot where I put it. I was like, thank you, Jesus. So yeah, so I did that for 6 months. So what I told my husband I'm going to do is, because we were not spending our money correctly, we had so many monthly payments, we really didn't have a lot of extra money. I told him, if he didn't mind, I was going to go and get me a second job just to pay off the credit cards. And I did that. It took me 2 years to do it because I had other things going on during that time. You know, life going to always happen. It's not going to stop happening because you got these goals. So, yeah. So, I did that. It took me about 2 years to pay them off. And I did it. I paid them suckers off in 2020. I remember the day. And I quit my job. I normally don't quit a job without a notice. But yeah, I did not like that job. I quit that job that day when I made that last payment. Yeah. So that's one hurdle I had to overcome, using credit card. The second hurdle I had to overcome was unnecessary shopping. I was shopping just to be shopping. A lot of time I used to shop if I was depressed. I stopped doing that. And I tapped into my spirituality when I got kind of down. And it helped me a lot. And the last thing I stopped doing was using my debit card. I started using cash. A lot of people say they don't like cash. Mrs Vee did not like cash either. But guess what? When I was using my debit card and credit card, that was not working. So I said, I'm going to try the cash just to see. And I love it. That was the best decision I made. So before you just say you don't like cash, just try it if you want to. You don't have to try it. But I want to see everybody succeed that wants to succeed financially. A lot of these people that say they don't like cash, I think they just say they don't like cash. I mean, I don't think they have like a reason why they don't like cash. I didn't like cash because it was just easier to swipe my credit card. That was the reason why. And the reason why I ain't like cash is because I was spending a lot of money. So I didn't want to walk around with no $800 or $900 worth of cash. Because remember, I was swiping my card. I don't care if the balance was $259, swipe, $449, swipe, $523 swipe because I was not a okay. And last but not least, I'm gonna let you guys go. Who is your inspiration? Mel Budgets on YouTube. I was watching her video and she really inspired me to start using the cash envelope system. And where do you find your inspiration? My current situation was my inspiration. The fact that I didn't have a lot of money in the bank and I was living paycheck to paycheck. That was my inspiration. So that's it. That's going to conclude this video. I'll be having different videos where I'll go over different parts of this workbook. And I want to go ahead and thank Mommy Trader for all she pours into the community. And again, I want to thank Kathy's Cash and Coin, HD, and Ray's Budget. Guys, go check those. This is Miss V. I'm going to always show you a way to save. So let me know in the comment section financial mistakes that you have learned from that you don't mind sharing, and what did you do to change your situation, your financial situation. So yeah, so Miss V is getting serious because I'm 51 years old. I would like to retire at 60. So I got 9 years to get some things right. One thing I'm going to do is increase my contribution to my 403B in addition to, you know, of course, saving money and investing in the stock market that way. So yeah, have a nice day.